we will be talking about another wealth tools, which is cryptocurrency that is able to give us some passive income. So I hope you guys fill up your stomach before you miss anything out. First of all, is I like to just start off with talking about this friend of mine. His name is Warren. Surname is Seah, which he is the guest today. When we start to get in touch with Warren, and he actually having a very great passion in actually sharing with us what is cryptocurrency all about. If I remember correctly, that was actually last year or so. Was it last year? I can't remember. Probably later I would just dig up from Warren. So at that point of time, I'm very skeptical about cryptocurrency, and I hear a lot of sad story. But of course, there is also a lot of good stories behind it where people become very wealthy. People become overnight millionaire, billionaire even because of cryptocurrency, and especially those that has actually invested in Bitcoin. All right. Whether or not we are discussing on Bitcoin, all this or not, we will leave it to the guest, which is my friend Warren. And this is how I got to know him. And actually, only to end of last year, I started invested a bit of money with him on the cryptocurrency. So probably you may ask me how well I know about cryptocurrency. I will just tell you, I really don't know much. So that's why today we actually invited Warren to come and share with us. And it's also using this time for me to learn more from him so that I know the money that I invested is really somewhere that I think is a good place for me to have some passive income. So without further ado, let me just intro my friend to you. He's also an author. He written a book, and the book title is actually Crypto Assets for Passive Income. So this book, I think, is very interesting. I have gotten one of his book, and I have read it as well. So if you guys actually have the chance to get his book, I think it's great because he actually shared a lot about cryptocurrency within the book. And then he's also a developer by nature. He's very good in IT. All right, that's for sure, no doubt in it. And he's basically the co-founder of this company called Flat.io. What is this company all about? I'll leave it to Warren to share with you later. And last but not least, he has been interviewed by MediaCorp as well as this Singapore Bitcoin Club in some of the occasion. All right. So without further ado, I would like to bring in Warren so that you guys can actually dig out more information from him. Great. So let me just bring Warren in right now. Hi, Warren.
Hi, Jeremy. Thanks for having me. It's great to be here.
Yep, definitely. I think not only you, those who are inside this room with us tonight, is basically everyone is having probably a lot of question mark and a lot of things at the back of their mind right now. Probably tonight you'll be the best person to actually clear their airs and clear all the question marks away. So I'd like you to give a bit more intro, because just now the kind of intro probably from me is very, very surface. So probably a lot of people would like to know actually who you are and why you become a crypto guru, I would say, today.
Thanks. Firstly, thanks for the great intro. I'm the author of the Crypto Assets for Passive Income book. I started my fintech journey like many others. I'm a econs. I'm a bachelor in econs, and I was so fascinated with the finance industry that the place that I went into requires a lot of technical skills, IT skills. And as a result, I make myself a developer. Till today, a lot of web applications that we run in Flag One, because cryptocurrencies comes under technology, at the same time it comes under finance, then it's multidiscipline that if you don't know finance, that's very difficult for an IT person to understand. All the statistical ratios, the data analysis. But when you have skills, multidisciplinary skills that we are in the information age, then that's where we landed like in the right spot. Yeah. So there goes my journey, and I've been in there since 2010 until today. We're still in that industry. Yeah.
Great. That's very great. Awesome. So I believe tonight is the first question definitely is why should we invest in a cryptocurrency instead of any other products? Because under the wealth, there's many kind of product that can actually be part of our passive income. But why is it so that you preach that cryptocurrency should be the right choice for you at this moment?
I try to present a lot of data. So I have actually prepared a set of data today for this webinar, so that you should consider cryptocurrencies, in specific Bitcoin, as an alternative investment in 2020 and beyond. But at the same time, I come in with a very important message, which is very related to the current landscape that we are in, that we are right now in the pandemic. And the gold prices right today, you are seeing that we are going in an all-time high. And as a result, I come with a message, and at the same time, there could be a possible solutions that the cryptocurrency may fill the gap.
Yeah, why
Sharing
don't you
some of my data.
some of your data or slides that can actually enlighten us further? That would be great.
So I'll share with you some of the data, and I have specifically prepared this based on the Singapore context. And firstly, I'll need to go with that I'm not a financial advisor. I'm not a certified one. Everything that comes within this webinar is my personal opinion. So firstly, you already know that I'm an author of crypto assets. And then my book has been endorsed by the crypto shakers in the space, such as Roger Ver by Bitcoin.com and many other blockchain giants, crypto exchanges, directors and founders. So this was the book launch we had last November 2019. We have a few blockchain giants that came out. This was a photo we took with them, and we were in a fireside chat discussing about the future of cryptocurrencies. And here's another photo of that book launch event. Jeremy has given me a very great intro. In April, we were invited to speak with Singapore Bitcoin Club, and then shortly 2 weeks ago, we were invited to speak on a Finland-based blockchain group. I come from a space of data analysis. A lot of the things that I'm trying to do, it has to go through the data before I give my hypothesis. And at the same time, my Flag One Private Limited is a certified fintech company by the Singapore Fintech Association in the area of AI and data analytic provider. Before I talk about cryptocurrencies, I want to share with you what are the positions that the authorities, the governments, the Singapore governments has placed a stand in Singapore before I delve into why you should consider as an alternative crypto assets. Now, firstly, in 2018, in the run-up to 2018, which is the bull crypto market at that time, Singapore comes up first in the area of ICO. So if you treat it, ICO is like IPO. It is like a method of fundraising, but all done through the coin way, the cryptocurrencies way. And Singapore clocked in the top in the world. The next data I want to show you is on the second quarter of 2018, Singapore raised out of ICO projects, it raised a total of $575 million by ICO ratings reported in this figure. It's topped the region for USA. In fact, it came out the best, way ahead of US and UK.
Sorry, Warren, what is ICO, by the way, in case some of the audience may not know?
ICOs is initial coin offerings. These are projects, these are fundraising. Like a listed company, when they go listed, they go through a process called initial public offering through the exchanges. For ICOs, it is done through a way of using programming and Ethereum blockchain. It is a fundraising process, to put it very simply. MAS have started experimenting blockchain technologies since 2016, so it's nothing new. Cryptocurrencies, the technologies underlying is blockchain technologies, and you can also call it distributed ledger technologies. If you have been to the FinTech Fest, Project Ubin will be something that they are going to talk about it. Now, Temasek in May, this is a news that was 1 month ago. Temasek backed this crypto project called Libra. This is a stable coin, which is another cryptocurrency we call stable coin, launched by Facebook. If you aren't aware that ERAS, if you are a business in Singapore that handles with cryptocurrencies and you make money in cryptocurrencies, you are bound to pay corporate tax with that. If you are an individual, this is our stand. So if you are an individual, if you hold cryptocurrencies and for a store of value, for for speculation or for whatever means, the money you make is free from capital gain tax. So if effectively, it is great to be in Singapore to be a cryptocurrency investor, because you don't need to pay any income any capital gain tax. Like if you were in US, then that would be a complete different story.
Just like
so
property.
so that's the landscape. So my agenda for today is that I want to come out with this message, whether I'm correct or wrong, but this inflation story, that inflation are good for investment. But with a post-COVID, I want to introduce to another perspective. I think this inflation is going to be uncertain. It's going to be bad for investment. I hope it won't come true, but I'll share with you more, and I'll go on to providing you the necessary solution for that. So, and that is where I propose a few ways that you can do. In fact, Bitcoin is one of the solutions. So, and even though I'm very much into cryptocurrencies, but I know Bitcoin is not for everybody. So this is something I have for you today. Firstly, inflation, we have to look at Singapore inflation rates over the last 10, 20 years. And I want to point you to the attention in 2005 to 2010. These were 2005 to 2015. These were a healthy inflation rate that the central bank, like MAS, would deem the economy to be healthy is anywhere between 0% to 1% to 2%. So these are healthy range, and a healthy inflation rate will push the economy to be better instead of none. But in 2005 and 2015, you see that we go past the healthy rate. In recent years, our inflations are probably 0%. And inflations are derived from consumer price index. So this, in short, we call it CPI, consumer price index. To look into the nitty-gritties, we look at the CPIs to understand why the inflations in 2005 and in 2015 were up to 8% and more, which is more surpass the healthy rate. The red arrows shows this is the first time we increased our GST from 3% to 4% in 2003. GST was first introduced in 1994, and then here are a few, because these are national statistics. It is hard to pinpoint exactly which are the factors that causes a surge in our inflation rate. I am proposing two things that I feel are big contributing factors to the inflation. And the red arrows are GST increase from 3% to 4%, the second increase in 2004, and this is 2007 where we hit it to the current rate in 7%. And the green arrows are right after the financial crisis, the Lehman Brothers crisis, where the first QE happened in US, quantitative easing. In short, quantitative easing is about printing money, and the US Federal Reserve printing a lot of money to stimulate the economy because they have undergone the worst financial crisis ever. And looking back over the 10 plus years, right now you don't feel it that way, right? Because we are currently in a pandemic, and maybe the worst we have yet to see the worst. But in these three green arrows, you are seeing quantitative QE easing 1, 2, and 3, and it totals about 13 trillion US dollars that were pumped into the economy. Now, why is it relevant to us? And you see that all these arrows, after that, our inflations go right up. But some people, it is a hotly debated subject of whether inflation accounts the real inflation rate or not. In fact, economists and analysis feel that the current way of recording inflation may not be correct. So CPI, based on the Ministry of Finance in Singapore, they do a 5 years, and they arbitrarily think that this is a basket of day-to-day commodities that a Singaporean will buy, and from there they allocate, and this forms the CPI. There's a fine print behind, certainly, where if you visit this page, there's a fine print that your inflation that you feel may be completely different from what they have put up, because your buying habits may be different from the norms. So that's my perspective of trying to track down inflation is through this money supply. This is money supply, the money and coins circulations and the deposits we have in our bank accounts. We track it through M2. So M2, and if you have seen over the past 20 years, whether our inflation rate tells a story, it tells a completely different story from the standpoint of from M2. We see our money supply expanded by a factor of 2.5 times, from 200 billion Singapore dollars to the current 683 billion dollars. Our population increases over at that period by about 46% only, from 4 million to 5.7 million right now. But our money supply have actually expanded 2.5 times. Now I will put the same set of arrows over there, that if you see our money supply, these were I hypothesize that these were the biggest contributing factors to why our money supply have expanded so much. And you may have a question of how did the US print money? Does it even why have it affect us? I will need to explain myself. When big countries like US, they started printing money and then inject into their economy. When they print a total of 13 trillion in a matter of years, what happened is that it devaluates the US dollars. And for a country like Singapore that is highly sensitive to, because we export our services and goods into the international community, and US as a country, it is the fourth trading partner that Singapore deals with. When big countries like them, when they start printing money, their currencies devaluates, and Singapore dollars become to appreciate ahead of US dollars. It's good for our consumers, but bad for Singapore goods and businesses and services. When Singapore appreciate, our goods in the international community becomes way expensive than any other. And eventually the Central Bank of Singapore must do something about it. They must tweak the rates. And our foreign currencies reserve is limited, right? So the best way moving forward is, when they print money, we have to keep it within boundaries, and we need to try to smoothen the rate so that we don't have the outliers, the large deviations. And what happens is that when they print money, the central bank will start to print money in line to keep this rate as close as possible to the status quo. Yeah. And to point you to the direction, COVID, for the past 2 weeks, US has just started printing $3.5 trillion. Singapore has taken their package 100 billion Singapore dollars, and these are going into the money supply. When Singapore, their stimulus package for the COVID, about close to 100 billion from the reserve is taken out and is going into our money supply. And this is going to cause our money supplies to expand way faster than any that we have experienced in the history of the past 10 years. And to calculate how much expansion we can find, economists will use these ratios, the money multiplier. For your knowledge, if 100 billion is introduced into the money supply, over the next 5 to 10 years, we are going to have a multiplier of at least 3 times to 6.5 times. So we are going to see our money supplies going to $1 trillion in the next 5 to 10 years. And what does it imply? So this is how I'm projecting forward. And not only that, we have a potential of increasing our GST, the consumption tax, in 21 and 25. It is expected to be done over that period of time. And we are going to see way even more inflations going forward. So let me put to you why money supply is an increase in money supply And if you know that we can print money easily, most of the countries can do that easily with little cost. But our commodities like oil, a lot of things are finite. And when our money supply just increases like that, we are going to feel the crunch of the prices of commodities to increase. And likewise, the inflation is expected to go up in the next 5 to 10 years. I feel we have never seen before in the past 10 years. And it's not going to be the same. So the factors leading to inflation, a lot of the governments across the world, not only Singapore, they are afraid about this thing called stagflation. The inflation that we are going to see may be different from what we have seen so far. They are not the healthy inflations. They may be the worst stagflation. If you are going to see the second wave and the third wave of COVID coming, we are going to see disruption to international supply chain, and commodity prices are going up and people are losing their jobs. We are going to face a price increase while at the same time people losing their jobs. So this, we call it stagflation. I hope that this is not going to happen, okay? I hope I'm wrong. And then the next thing that you see is that coupled with all of this, money supply are going to increase because judging by the stimulus package, by far we have seen, we don't know, we are going to anticipate more countries doing that. And that's why I feel that we are going to see inflation going to unhealthy rates. So what the next big wave of inflationary pressures and market uncertainty is coming. And are you prepared for it? The traditional safe haven access against inflation and market uncertainty. So right now there's market uncertainty. And you know this gold. As we are speaking about today, gold are going to all-time high. And this is I don't think are good signals that are showing with our economy right now. And even though we have experienced the stocks market, the equities in US performing very well in the past 3 months, the gold prices are going up. So gold is a safe haven where people go look, where there are uncertainty, where people are risk averse. They look for gold as an asset. Now, gold characteristic, it is an inflation and market risk hedging tool. It is a great store of value. It is extremely finite. By the way, gold is, the government don't back their money with gold anymore. After 1971, all governments' issued money are not backed with gold anymore, not including Singapore, including Switzerland. Their money are unpacked as in 1971, the Nixon shot by President Nixon. We leave the Bretton Woods Agreement in 1971, and it becomes so easy for governments to print money. And as a result, in the next 5 to 10 years, we are flush with money. Supply curve, and why gold is a great tool for store value, because no matter how high the gold prices increase, as a producer of gold, we can't take gold, extract out from the ground and sell more when prices are more expensive. We can't do that because it is a very time process and then very expensive process to extract out. As a result, these are the characteristics that make gold a very good store of value, and it continues to be sought after when the market and economy is not doing well. In economics, we will use these stock to flow ratios to measure. Gold is extremely great for store value because of the high stock to flow ratio. To give you an example, the gold here is 62 and the silver is about 22. It's about 22. And compared to other commodities, what is stock to flow ratio? It is defined as the number of years stored in inventory relative to annual supply. So we take the existing supply of gold divided by the inflation rate, which is the annual growth rate, the annual growth of gold, which is 4,000 tons. And we take this divided by this, and it's 54 years. You can treat this stock to flow ratio as a scarcity score. You can imply that if you were to produce 190,000 tons, you will take 54 years to replace the current inventory. So the higher it is, the better, the higher the stock to flow ratio, the better it is as a store of value. And that's why gold is one of the best. However, it comes with some limitations of gold. It is not easier to transact. Like if you have gold and I have gold, and then we If I have a gold, I want to sell it to you. You probably have to find somebody to inspect the gold or to make sure that it's pure. The purity is there. It can be counterfeited, but it's not easy. But it can be counterfeited. The cost of storage and insurance for large quantity of gold is costly. And then there's insurance. You have to take the insurance, foreign insurance, and all this. And of course, in 1930s, we have found that U.S. government has made gold ownership illegal in the past to legally seize public gold in 1930s. So even though gold is, you have the right to own it, but the government has taken away gold from his citizens before by making it into a law. And the disadvantage of gold is that it is less appealing to Generation X and the generation and beyond, like Gen Y and Z. So what's the next best alternative? It is Bitcoin. Then why is it? Because firstly, Bitcoin has a stock to flow ratio after 2020 is at 55.92, which is very, very close to what gold is. And in the next and after 2025, you will see that the stock to flow ratio shoots up way higher than gold. And this is why this is one of the best time to understand about Bitcoin, because it has yet to reach that stage, which means that there's a lot of mainstream, a lot of adoption that can happen. And we are still in the very early stage. These are the functions of why gold, fiat, and crypto makes good money. And I just want to highlight a few that Bitcoin has done way better than fiat, the US dollars or Singapore dollars and gold. And that is transactable. Bitcoin is easily transactable with anybody, which means that if I want to sell it to you, you just give me your wallet, I can transfer it to you like sending an email. It's similar that way.
Sorry, Warren, what is fiat, by the way?
Fiat is government issued crypto. Fiat is government issued dollar. So Singapore dollars, renminbi, US dollars.
Oh, okay.
Fiat is come from a French word, means not it's paper money.
Okay.
Because when we leave the gold standard, Bretton Woods Agreement in 1971, when President Nixon did that, all government issued money effectively left the gold standard. So it comes to the responsibility of a government central bank to determine the supply of the dollars that is in the money supply. And we, as a result, we call it fiat currency.
Got it.
Bitcoin is extremely scarce than gold after 2025. Here, and there's also one more is portability. Bitcoin it is denominated in 8 decimal places. You don't need to buy one Bitcoin, which is now today's worth $9,500 US. You don't need to do that. You can buy like $100 worth of Bitcoin. Because it's denominated to 8 decimal places. It is highly divisible. So that is why it can be used as a great transactional payment cryptocurrencies. And another area I want to highlight is decentralization. As you know that I have highlighted gold. US government can put it into law to take gold from the citizens before we've seen it happen. But in Bitcoin, the money is yours. Nobody can take away from you unless you choose to. Bitcoin is classified under the US law as a commodity and is regulated under the Commodities Futures Trading Commission. So it's not under SEC, Securities Exchange Commission, but it's under Commodities Futures Trading, which is a commodity. So why Bitcoin is called digital gold? Because it has a high stock to flow ratio, and as a result, it's very simple. It has characteristic way better than gold. In the crypto assets, it has the longest price history. It has proven to hold its value since 2011, and is extremely scarce. This is a 10-year history of Bitcoin. We saw 2 major bull markets. We see 3 bear markets, and in 2014, that was a time when it is called digital gold, because at that time, 1 Bitcoin is equivalent to 1 ounce of gold. So it is deflationary by nature. So Bitcoin has a fixed 21 million, and this 21 million will all be fully out by 2140. The annual inflation rate is 328,000 Bitcoins. And each time this inflation, we have an event called Bitcoin halving event that half the inflation rate every 4 years. And that is why if you see 2020, the stock to flow ratio is like this. In the next 4 years later, we are going to see 20. We are going to see the stock to flow ratio surpasses gold, which may mean that it may be a better store of value than gold. So the current Bitcoins, we have 88% of Bitcoin already in the money supply, and currently there's 18 million Bitcoins, and there are 2.5 million more to go. What's an inflation and deflationary asset? If you hold the Singapore dollars or US dollars, it is being programmed in the system that the $20 that you fail to spend today, if you keep it for the next 10 years, it's going to give you way lower basket of goods. It is done in that way to force you to spend your money. But in an asset like Bitcoin or gold or silver, precious metal, the longer that you hold, you may find that it holds more value over time. So for a well-known property investors like Robert Kiyosaki, he in April 4th, he said about this thing, and I like to quote: "Do not, you know that at that time the U.S. governments, the U.S. Federal Reserve are printing money, are giving it over to their citizens, just like what we have seen in Singapore." He has said for years, savers are losers. So I have highlighted a few points to you that you have to take notice that the money supplies are going to expand so much. So he talks about in this tweet: buy gold, silver, Bitcoin. Dollar is dying, silver's $20, best buy for future. So yeah, then he goes on to say that gold and silver are God's money, Bitcoin are open source people's money. Bitcoin, gold, silver are important because it's not controlled by Fed, Treasury, and Wall Street. Yeah. So I want to state a few things of what do you mean by open source money. Bitcoin is an open source software that you can easily, is fully transparent, is auditable. You can hire any developers to go in to check their codes. They have 800 over developers that are working on this Bitcoin software, and that's why it's one of the best open source projects in the space, in the crypto world space. Each of the ledgers, the Bitcoin ledgers that record Bitcoin transactions, sits in every computer that is running under the Bitcoin network. This effectively means that nobody can shut down this Bitcoin network. Like in a traditional network, you see that if this network goes down, everyone cannot access. But in a peer-to-peer decentralized network, when the Bitcoin ledger sits on every computer in the system, when one is temporarily down, the protocol will run will run as it is, like nothing happens. To put it in perspective, these are the Bitcoin nodes that are running all over the world. For example, if one day some countries decides to ban Bitcoin, the Bitcoin protocol still exists in the rest of the part of the world. And that is the decentralized network. The next thing, transactions are fully transparent and trackable. We have, the government has developed things to track it, and transaction once stored on the Bitcoin blockchain cannot be reversed. So as a result, my summary of why Bitcoin is digital gold: it has proven its value, it has high stock to flow ratio, it has a very limited supply, way limited than gold, it has all the benefits of gold, and if not better, and the decentralization is censorship resistant, so it is free from any government controls or any single entity control. Come to my last part, 3 reasons why you should consider Bitcoin as an alternative source of asset in 2020 and beyond. Firstly, these are data. I will just give it to you. If we given enough time, I have plenty of data to show it to you, but I just want to show you in 3 short statements. The market bottoms that we have seen for Bitcoin have not dropped below the previous market bottom, not even once. To put it across to you, the first major Bitcoin recession, Bitcoin see the price of dropping to $2.39, and that was recorded in 2012, shortly 10 years from prior to today. Then we see the next major recession, we saw it $200 before it started climbing up to 19,000. And the current one that we have just experienced, it went to 3,200. So the current recession, the prices has not dropped to the previous low. And likewise, it is relatively safe from data that it is a great store of value by this definition. Now, the next second reason why you should look into it is that Bitcoin have one full market cycle that lasts a total of 4 years. So one full market cycle consists of one bear market and one bull market. We have recorded in our data that shows that a complete cycle is 4 years. If you are holding it for long term for a store of value, it serves a great store of value and an asset comparatively to gold. And in this, you can take, this is a 9-year chart. And you can see easily if you buy the price of Bitcoin and you project it 4 years later, it is always going to be higher than it is. Now, the last reason I want to leave you today, and hopefully I'm ending my sharing, is that we have just gone out of a crypto recession. And what it happened, and the sleeping bull market is just right before us. And that is why it is one of the best time to understand, to get yourself educated in the crypto assets community. Yeah, this one that you have seen. So in summary, these are my 3 reasons. And if you would like to find, if you like the content that we have seen, you can find me in my Facebook by the name of Warren Seah, Twitter, Telegram, and even Udemy. If you search Warren Seah, you can find out more content from us. So I hope that I have shared, I've given you a big picture, and of course, a picture that is localized to the Singapore perspective. But at the same time, if you were in any other places, whether it's in US or in any places, I can easily find the same data that we are in the unprecedented time in terms of printing of money, and our money supplies are expanding way faster. And the inflation rate we have to, and the uncertainty. And my final message is that gold, silver, precious metal are going to be way risk as a hedging asset for you. And if you are more adventurous like us, Bitcoin may be the best next alternative. So over to you, Jeremy.
I think Warren have given us a very thorough explanation on Bitcoin, and I do agree is that whenever there's a crisis, there's always an opportunities. All right, your way to your G in a way. So definitely this 45 minutes, is it 45 minutes? Yes, this 45 minutes is definitely not enough in order to dig out as the 100% from Warren. Definitely, there's even more things that we would, as a cryptocurrency investor, you will definitely need to know more. This 45 minutes is just enough for you to start off knowing what is Bitcoin all about. But in case if you really need more information, like what Warren said, you can actually find him in his Facebook, and the rest you can actually get it from the Twitter or whatever. But I would like to stress is that whoever in this room right now, if you are, if you want to know more about cryptocurrency and you are really having the flair in learning more, really go into this Warren Seah's Udemy online courses, which he is really giving out almost like a big fraction out of it, because Udemy courses is just to let you have a feel of what is the things that you want to learn. But basically, from there, you are able to connect with Warren further in order to move on in your cryptocurrency investing journey. So I hope tonight's session, and if you think that this session is really enjoyable and you have learned something from it, I would like you to actually share with your friends. All right, please like and share this video out to them so that they can watch the replay. And most importantly is, before even you go, probably I would like to ask Warren one last question. Warren, is there a word of advice for our audience on Bitcoin itself, other than the 3 things that you have tell us? Is there a word of advice when it comes to cryptocurrency investing? Over to you.
I see Bitcoin not just in terms of price, but I see Bitcoin as a technology, as an emerging technologies that is disrupting the whole fintech space in the next 5 to 10 years. And there are a lot of great stuff that is coming out from the whole crypto community. and there's plenty of opportunities. As a result, this could be one of the best time with the 3 reasons that I have shared, that to get yourself more exposed to the areas of cryptocurrencies or Bitcoin. And my word of, maybe I would like to put it that way, just take a look at Bitcoin alone, because cryptocurrencies, there are simply too much. And currently there are like 7,000 cryptocurrencies, and I don't suggest that you look into that. Every single cryptocurrencies are different, and Bitcoin is the one that I can safely share with everybody that this is the most stable and crypto asset in the whole in the crypto space.
Correct. Yeah. I think for now, cryptocurrency is still not very well accepted to a certain extent in the world, but definitely for sure, believe me or even believe Warren, I always remember when those back in during the police wear short pants that time. All right, that goes a saying, everybody is using paper money. Nobody believes that there's a piece of plastic card that can actually replace paper money. And there goes the credit card came into the market. After credit card came into the market, nobody believed that a phone can actually replace a credit card. And now, do you believe that cryptocurrency can actually replace not only paper cash, credit cards, and even the phone that you can do transactions? So always believe that there's everything that goes a saying is that you have to look at the future and prepare for it to come. All right. So I would like to thank everybody. All right. And I hope today's session really is very enjoying. And I think I learned a lot from Warren. And
also thanks, Jeremy, for having me. It's a great pleasure to be able to share.
Yeah, really, the audience have actually gotten, I think, very good information from you. Hope that we are able to have another session in the near future. All right. So yeah. Thanks everybody, and thanks Warren for
thanks,
coming.
Jeremy.
I see you guys again.
Okay,
Bye.
see you. Bye.